Hello and welcome to the Decrypting Crypto podcast. It is November 20th, 2025, and we're here with your weekly recap of the biggest stories in the crypto space. I'm Matthew House Barbie, and as always, I'm here with Austin Knight. How are we doing, Austin?
I'm hanging on.
We're all we're all hanging on a little bit. I think I was certainly feeling more like I was hanging on in the run up to Nvidia earnings yesterday, which seems to be about the
Mhm.
most important thing on earth every
Yeah.
quarter. So that's been quite the roller coaster ride, but
Well, it
lots
is this
lots for us to
interesting
talk about.
thing that we've talked about in previous episodes where, you have this sort of magnificent seven or this group of tech companies that are effectively they seem to be propping up much of the S&P 500. And the way that that's all working is based on speculative AI growth and earnings. But ironically enough, all of those companies are basically trading with each other. So,
Yeah,
as Google invests in AI, it's buying from Nvidia, and then we say, oh, AI is propping up Nvidia, and so then
and
that
then
means that AI is
OpenAI is
working.
just
So Google's value goes up.
exactly, and OpenAI is just hiding behind them all, just creating additional deals and flows to further bolster this narrative. But yeah, it's I think
Yeah.
that's kind of the main question mark that we have outside of the momentum around the AI trade. It's just, is this just, you know, incestuous flows between these select, probably like four groups of companies, and is it really expanding outside of that? um
Yeah.
so we're not just going to talk about Nvidia earnings. We are going to talk a little bit about it, but what I want to make sure we do today is talk a little bit about where we are. We've also just had non-farm payrolls, the backdated data from September, come out about an hour or 2 hours ago now. um, we can dig into that and what it means for crypto and the look forward that we have. So as we mentioned, Nvidia kept our bubble, or well, our dreams alive with some solid earnings yesterday. They came in at 57 billion in Q3 rev, which is an eye-watering amount. Um, 55 billion was estimated. Funnily enough, I would say that that's like not even remotely what you would put in the category of blockbuster earnings. I think Nvidia had to beat expectations. That's for sure. Otherwise,
Mhm.
we'd have had a very bad, uh, I was going to say 24 hours, but very bad end to the year. Their Q4 revenue expectations, they upped from 63.7 billion up to 66.3. Interestingly, I don't know if you saw Jensen's comments around the China revenue expectations being zero, which I thought was kind of
Mm.
interesting. I feel like the AI trade is quite well set up going into 2026. I don't feel like I have a good sense of anything else for 2026, to be completely honest.
Mhm.
Um, but I think we got through an important test for the market, which was, are we getting kind of ahead of our skis here on the AI trade? Are valuations even more inflated than we already know that they are? And I think what Nvidia showed was, okay, don't panic. Real money's being made.
Mhm.
Um, and why that's important for crypto, right? Is this is momentum on risk assets. And that's the biggest manifestation right now of risk in the market, really, is crypto again. Because it's not a direct beneficiary of the AI trade. It's not really a hedge against in this debasement trade like gold is. And it's kind of stuck in the kind of tail end of risk. So I think that's where we talked about this, right? Where we're saying, bad news is hitting twice as hard. Good news is kind of half the benefit. And we're still seeing that kind of play out a little bit here.
Yeah, definitely. I mean, we saw Bitcoin drop 10% this week. As of this morning, it's hovering right around 90K.
Yeah.
That means that over $1 trillion, I think like exactly $1.1 trillion in crypto market cap basically evaporated in the last month and 10 days.
Wow.
So unsurprisingly, that fear and greed index that we loved to refer to at other down periods in these cycles, especially during the whole FTX thing. Right now, the fear and greed index is back to its extreme fear territory, which I will tell you, Matt, is like my favorite place for it to be at. And I know that this is like a time when everybody is panicking. We're seeing ETF flows are softening, which I think is an interesting one for us to dig into. But I think that there's a lot to unpack here. There are some first order causes to this, one of which is that you're seeing a lot of leverage flushing out because we had a lot of overextended perp positions, and then this created some cascading liquidation. Another is this macro correlation. I think as well, like there's more unpack on the macro side of the that we're talking about. Really, what we're seeing, I think, is a lot of stocks wobbling because of AI bubble fears. And this is something that crypto feels really quickly. It isn't quite that hedge that it has been promised to be just yet. Another element is that there is some dollar strength. We're seeing some higher near-term rate expectations, and this puts pressure on all risk assets. And then, as I mentioned, you've got those ETF flows, which admittedly they're not huge, but it is enough to topple some thin order books.
Yeah.
So my take on this, as it is with all of these moments where the fear and greed index reaches extreme fear, is that it's not a time to panic, despite all of the fear that's going around, unless you think that Bitcoin and crypto as a whole is, basically a Ponzi scheme and can totally evaporate, which I don't believe that at all. Then this isn't a time for panic. In fact, personally, every time that I've seen this type of cycle happen, I viewed it as a time to buy because rallies, they pull in a lot of tourists, and that creates fragile maturity. The sell-offs, they push out weak hands and tourists, and the system becomes more investable for serious capital as a result of that. And truthfully, if this sector wants institutional adoption, it actually needs these momentary resets. We've been through these types of things many times. Of course, each time there are details that are different, right? History doesn't repeat, but it does rhyme. But I view this as being a bit of a return to baseline behavior. Crypto isn't a fully mature asset yet. We were seeing a lot of the volatility make its way out of this space, but I think that this shows like that's not completely done. It also does expose maybe some structural weakness. If $1 trillion can evaporate just on leverage and macro fears, I think we're still a little overly dependent on sentiment than we are on utility or usage. And that real adoption isn't quite cushioning us yet. I also think there is a liquidity correlation. Crypto trades like a sort of tech beta stock, and people, like I hinted at before, we like to believe that it's an inflation hedge or that it's uncorrelated to equities, but right now it's a liquidity hedge. Crypto basically lives and dies on where global liquidity is flowing. So this could be just a last big flush before fundamentals really start to return and to matter. We're close to the point where the market is beginning to reward things with actual revenue, as we were talking about just last week, like tokenized assets, DPIN, staking yields that are tied to real usage, so on and so forth. And this downturn creates the conditions for that type of a rotation. So we'll have to see. But I do think what do you think, Matt?
Yeah, I think like, if we think about, so obviously going from 120K in October down to, we hit 88K yesterday. It feels very painful to go and see that kind of pullback happen. I think especially for a lot of people that maybe are newer to crypto and they're not used to the volatility, it's a lot. But in the reality, I think when you zoom out a little bit here, this isn't out of the ordinary. And I think there's like two things that you want to pay really close attention to in all of this. It's like, what is the driving force behind this? And what could change this, both to the upside and the
Mhm.
downside? And if we kind of like, if I bring up, I think this is sometimes useful to zoom out a little bit. Let me share. Let's get BTC chart up here, right? When you zoom out, right, and you look at the monthly, these are the monthly candles, right, of
Mhm.
BTC. Kind of going back to, we look at the crazy bull run that happened through the end of 2020 and the highs there, right? This is what we've seen this month. It's a pretty dramatic candle, but it's pretty much the same as what we saw in terms of a drawdown in February. In
Mhm.
fact, actually, we drew down slightly more down to the wick in February. So, February, April, that is, of course, right? When we had the tariff shock and then we rebounded. Crypto has been incredibly responsive to macro. And then, of course, like when you start zooming back in onto the daily, things kind of don't look good at all, especially when you start seeing this kind of formation happen, right? 4 down days like in a row. However, so like, okay, why? Why are we driving down towards this? I mean, we had this one big event over here. This would be the 10th of October, right? We had that big shock on the tariff side. And what happened from there is I think like alts got disproportionately wiped out. Of course, we talked about that. And BTC really tried to make a push to recover. We actually had very good support down at this 100K level, right? We bounced back up. And we were kind of trading in a range for quite a while. And then I think what started to kind of like really begin happening as we started to feel more of the pain of the government shutdown is this realization that at kind of these points here in the range we're kind of talking about, the likelihood of a rate cut in December was like 90% priced in.
Mhm. Mhm.
And we started to then see this kind of new reality of, wait, maybe this isn't a lock in. And the
Mhm.
lack of data that we were getting. And really, that's what this drawdown came from. As we started to see, okay, the likelihood of a rate cut, and we had the fear of, which we, by the way, have every quarter. We have the fear of, wait, is AI a bubble? Are we overvalued? Right? And then we go through this whole thing, and Nvidia posts amazing earnings, and everyone is happy again. But right now, we had jobs data, and we've just had that come out, and that's the one piece of data that we're going to get before the December 10th rate decision. I think looking at that is important because the Fed is actually not going to have any other data. We were going to have a somewhat reduced October jobs report. The BLS came out yesterday and said, we're no longer going to be able to provide this. We're going to attach it on to the November report on December 16th, which is after the next FOMC meeting. This is when you saw Bitcoin draw down to 88K, right? And it's like, okay, we went from a 50-50 on a rate cut decision to 22% chance priced in the Fed
Mhm.
futures fund rate, right? So
Mhm.
that you talked before this, Austin, about Bitcoin is linked heavily to liquidity. There is nothing more linked to liquidity than
Mhm.
rates, right? Like it it's a huge driver of that. We talked loads more in detail last week about things like SOFR rates and stuff like that, which also play a role. But look at the payroll data today. I think what we were kind of hoping for, like I tweeted about this earlier today. It's like, okay, the estimate was that we were going to come in non-farm payrolls that had been 50,000 non-farm payrolls that had been up month over month from 22,000 that we recorded in the prior month. Unemployment was set to be 4.3%. I think if we'd have seen what I was kind of hoping for is like, okay, if we see payrolls land in that 20, 30% zone, so coming under, but more importantly, combined with unemployment rate rising to either 4.4 or 4.5%, then, we have a much stronger case for a rate cut, and we should see risk assets rally quite aggressively. The first thing that lands is 119K payrolls number, which when I first just saw that, I was like, oh shit. It's weird when we're like kind of hoping for less jobs to be created. It's not actually what we want. It's good for the economy. But it's one data point here. But what did happen, which I think is just reflects the price action that we've seen so far in the past kind of 2 hours since this, which has basically been like people kind of going long, then going short, then going long, going short, and just like it's just been like quite choppy to the side. People trying to figure out what this all meant. Unemployment actually came in above 4.4% instead of 4.3%. We also had like continuing claims, so like people claiming for unemployment, right? Like they're unemployed and they claim for benefits. Sorry. 1.974 million for the week commencing November 2nd. That is the highest level since 2021. The highest level since 2021, right? So what does this mean, right? There's a load of like, there's jobs that were created at a much higher rate month over month, but unemployment has increased and continuing claims, it came in above not well above estimate, but quite above estimate, and hitting the highest level since 2021. What we can kind of probably deduce here is that when you kind of look at all this, it's instead of us saying, okay, we're seeing companies cut jobs, we're just seeing lower hiring activity. What you take from this is you say more people were going out looking for jobs and less of them got it, despite an increase in non-farm payrolls growth. So for me, while it's hard to kind of like cut through all that, this is more supportive of a rate cut in December. The problem, I think, is this is it for the data, really, that the Fed are getting. I think if we had the October one coming in, which was set to be, I think, in 2 weeks or next week, that you could go, okay, they can connect that as well. And it's so much more. I'm still in the camp here that I would not bet against a rate cut in December. I really wouldn't. I think, though, the Fed minutes that we had from the last FOMC meeting pour a little bit more cold water on that. They seemed a little bit more hawkish around holding. But for me, this is one of the most important things. If we see something come up that increases the likelihood of, more FOMC members or Fed governors coming out and being more openly supportive of a rate cut in December, we will see risk rally. This will be one of the biggest drivers, the likelihood of the rate cut. Now, after that, who knows? But this is a very different situation to September. Because people may say, okay, well, Matt, if that's the case, why in September did we sell off after the rate cut came in? Well, remember, coming into that, we were at like a 96% chance of a rate cut. It had been priced in. It was all priced in and people sold the news. When you're at like a 20, I think we're at like a 25, 26% chance right now, it is categorically not priced in. It's a huge upside surprise. Remember last year when we had that jump, was it September where we had the 50 bips just kind of out of the blue? And it was just like, whoa, all right. And then we kind of like rallied into that. It'll be like that. So it is on a knife edge. I think it would be weird for the Fed to pause. I can't see them being able to do it in January. So it feels like continuing, but it's hard to say. So I think
Yeah.
that's what's really gripping people. And it's when you have that hanging over, it's hard to have conviction and break through important levels. For Bitcoin to for us to feel good that Bitcoin can rally back up from even this 90K level, it needs to reclaim 94K and stay and kind of close out the weekly candle at that level.
Yeah.
Otherwise, we're just gonna keep bouncing and just having these rejections come in. Um, so I think that's kind of really, really
Yeah.
important. And equities are catching a nice bid today. So I can imagine for a lot of people looking at the Bitcoin chart thinking, okay, maybe I'm not expecting us to rally really hard right now, but are we not going to reclaim some important levels? That's the tricky piece.
It looks like it's happening right now. I mean, I'm seeing like green in front of me just as we've been talking. Um, I don't know if I don't think this is like directly related to your point here. But you did trigger a thought for me, which was a few days ago. There was this poll going around, which I just found to be really interesting. It was a huge poll that was conducted on X that said it was a two-part question. The first was, in your opinion, the economy right now feels good or bad? And then the second part was, you are doing poorly or well? And overwhelmingly, the response was, the economy feels bad, but I am doing well.
Hmm. Is that
And I
more
think that
representative of the
if you
demographic of X?
maybe it is. Yeah, that's true. That's a good point. Um,
I
but it
do think
is
it supports
like,
the K-shaped economy
I
thesis, though, right? Where
mhm.
actually, lower income individuals are feeling this disproportionately to the middle to upper
Mhm.
income, and that's why it's super clear, the K-shaped kind of economy feel that we've had now, where if you've been if you've got capital that you have saved and invested, basically, if you're an equity investor, which is going to be to a certain degree most of the middle to upper income market, you've done probably pretty well through this. If you're operating paycheck to paycheck and you're facing real challenges when it comes to finding work, etc., this is going to be a really challenging time, especially in the face of where we've had still relatively persistent inflation. It's
Mhm.
very hard for that level of
Mhm.
individual to kind of cope with a lot of this, and you can see it in the job market numbers.
Yes. So that's
So
what I
yeah.
was that to me is kind of what ties all of this together, because I would say actually, like, for the past 5 years, maybe at times this wasn't true, but just personally, for the past 5 years, that actually has been my overarching sentiment, which
Yep.
is, it feels like there are distortions in the economy. It feels like the economy is not healthy. But if I look around me, a lot of people do seem to be doing well. Like, everybody's buying Escalades and G Wagons, and I don't understand how that's possible.
Yeah.
um, at the same time, I think actually you can see that a little bit of that pattern in the job market. My opinion on the job market, and this is coming from a very specific lens, which is the tech industry, and more specifically like design and software engineering. But I
Hmm.
thought that can be somewhat extrapolated more broadly as well, because most of this phenomena, in my opinion, is being driven by AI. I think
Agree.
that what you're seeing is that top talent ICs, so like individual contributors that are really, really at the top of their game in terms of their output, their skill set, their reputation, their ability to market themselves, are crushing it right now. And what you're seeing is that the inverse is that, maybe like if you're mid of the pack in terms of performance or seniority, then you're kind of in like a purgatory. And if you're junior, it almost doesn't matter how good you are. You're not able to find a job right
Oh,
now. And a
horrendous. If you're a
similar thing is,
college grad, it's I think it's like historic lows
yeah,
of employment for college grad. And funnily enough, you talk about AI. AI is being a big driver of that.
that is the driver of it, in my
Yep.
opinion. Um, and the same thing I think is happening on the like senior leadership front. You know, if you're like a high performing, super engaged, can speak to your impact really well type of senior leader, the market is actually super hot right
It's
now.
very hot.
And yeah, and but again, if you're mid of the pack, if you don't have like tangible accomplishments to speak to, or maybe if you're just starting out in leadership, I think that it's a much more difficult market. And to me, what this is showing is that taste and decision making and even execution at a high level are extremely valuable, if not exponentially more valuable with the dawn of AI. But junior or low level or even mid level output and decision making is becoming almost like commoditized or useless.
Massively,
I don't want to say
massive.
completely useless, but
Well, like
yeah.
beauty is in the eye of the beholder, right? And I think for most companies right now, that's the case. I think if there is like a very here is the current job market in a nutshell. US and European like top talent college graduates cannot for the life of them get
Yeah.
a job because AI is either directly kind of eating the responsibility that they would take up, or at least there's a perception of it. Whereas on the other hand, the engineers building AI algorithms are going and taking 7 to 8 figure signing fees at Meta. It's
Yeah.
just like that. That's the job market right now. This is like,
Mhm. Oh
and
yeah, I
in
mean,
between,
you
it's very hard.
it is. And you I'm sure you saw, maybe we even talked about it on the show, those stories, coming out of the New York Times about uh you know 24-year-old CS grads that are brilliant and work on an AI startup for 6 months and then get a 4-year, $1 to $1.5 billion compensation package from Meta, and some of them are turning it down.
Yeah, that is the best bit of all of it. They're just like the that is the state of the market, and I think that's where you kind of see like, well, obviously there's some froth here, right? Like when stuff
Mhm.
like that starts happening, and similar stuff we've seen happen in crypto as well.
Mhm.
Animal spirits are out. We've seen a lot of IPOs across all industries as well. That's like there's been a lot of big raises. It's like all of this, and now I think everyone's just kind of just stopped and they've looked around and they're kind of like, oh, wait a minute, is this getting a little bit out of control? And it's like, let's just put the brakes on for a moment, and then everyone panics, right? And then we have to and then we go through this cycle and I think we're going to keep doing that for a little while. I think like if I bring this back to crypto, the last thing I want to touch on here is actually you mentioned ETF flows. The
Yes.
place that we're at now from a price level perspective is really important for Bitcoin. I feel like I say this all the time, but I cannot stress the importance of the zone that we've been ranging within over the past kind of 48, 72 hours. And the reason why this range is really important is because of ETFs. The average cost, roughly, right? The average cost basis, so the price at which ETF buyers, Bitcoin ETF buyers, bought in at, the mean, currently sits at approximately 89,600. Right? Yeah. Yesterday,
Ugh.
we broke through that level, which for many institutional investors puts them in the red and absolutely will trigger some kind of risk response. The yearly open, this is also another really important point. Like, people talk about levels in charts and stuff, like key opens, yearly open in particular being a big one, the quarterly open as well, monthly, but like the yearly open, the price at which Bitcoin started this year, that was 93.3K. We're down year to date now.
Wow.
You know, and most of the metrics objectively that you would look at across assets are like, okay, how are we performing against the S&P 500? Bitcoin sucks compared to the S&P right now. How are we compared to gold against the yearly open, right? So all of these, when you're looking at, okay, where do we rebalance in some of this risk? And or more importantly, if you do a retrospective of, okay, there was a bit of a shock, risk assets got hurt here, let's see where there was resilience, where there was strength. Because in times like this is where you see a rotation. What you see in the equity markets, actually, there was quite a big rotation, albeit there was a lot of selling, a rotation into the larger players. You know, the likes of Nvidia and co, yeah, they're all down, but they're down about like 10%, I think, since the highs of Q3. But you kind of look at the beta plays around all of these, the energy stocks, some of the kind of like wider tech, they're down way more. People are like, okay, well, I don't want to be in the beta right now when we're risk off. I'm going to cycle back in. I still want to have equity exposure because I still don't feel like it's over. And you saw a big rotation of flows. If you're in Bitcoin, like, you know, there's a huge rotation out. And this is why, like, if you think about ETH, any alt beyond there, that's not catching a bid right now, right? Bitcoin has to provide strength for there to be even like a rotation in the first place, a positive rotation into like ETH and then an altcoin rally. If we don't see really strong returns and strength from Bitcoin, yeah, that won't happen. You start seeing things like memes and other stuff rally while Bitcoin's down, very bad sign. Very bad sign. It means the cycle's over. So, you know, looking at November so far, we're about 2.9 billion in outflows across all Bitcoin ETFs. That's the second highest outflow month ever after Feb, right? Which was bigger, which was 3.56 billion. Now this is in USD terms, and Bitcoin actually is was at a higher price back then. But you know, you can see there's a big impact. I mean, we were green in April, May, June, July, and the numbers, right, is like, you know, starting at April, 3 billion in inflows, 5.2 billion in inflows, 4.6, 6 billion in inflows in July. August, we shed off 750 million outflows, but then we bounced straight back. September, 3.5 billion. October, even though October 10th happened, October, 2.4 billion in inflows. And now we've just like pulled back. You know, I don't think this is over. I think this is a pullback. And when we go into like the monthlies and we look at the drawdowns, it's not out of the usual for Bitcoin. However, I bring these levels up because they're such important levels, because if you can't get, especially one of the biggest flow of capital into Bitcoin, if that's going to start continuing to trend in and around like an unprofitable zone, it's not a good sign. It's not a good sign because actually, like, when we kind of take a look at some of the next levels of support down where Bitcoin could go, yeah, it's very realistic that the bear view here is that you tumble down to like the 74K range, and probably like the cycle low is around 46K. So,
Hmm.
and we're talking about, I still think long term Bitcoin continues in the chart up and to the right. But what we're trying to figure out right now is like, did we top out? Where do we bottom? It's less about will Bitcoin go up, and it's like, when will it stop going down and
Hmm.
resume its upward movement? And I think everyone's so excited about, this big cycle, and everyone's always very excited about it. I personally think Q1 could be very strong. If we get a nice surprise in December with a rate cut, I think we end the year well. If we don't, I think we chop around. I don't think there can not be a rate cut in January.
Hmm.
This is one of the other reasons why I find it hard to get my head around there not being a cut in December. But I've been wrong before. But that's kind of my view on this. But we are at a really important level right now, and because of the lack of data that we have coming out, it's hard to say like, okay, this will be the catalyst. So
Hmm.
I think that's what gives people a lack of conviction
Yeah.
as we land.
Yeah. Well, let's see where the Fed ends up. It'll be interesting.
100%. I think I don't think we're going to see much happen through the end of this month from a positive price appreciation
Hmm.
point of view. I would love to be wrong, but December, I think is going to be like max volatility, because like the speculation of the rate cut is going to get very intense. Don't forget as well, there's this conversation that's happening right now around who the next Fed chair is going to be. That's going to be
Hmm.
happening not long as well. So lots to play for. We'll keep an eye on kind of some of these important levels, and yeah, let's hope we get some good news in December. But we'll keep following all of this. I think at least there's some good news on the the equity front for now. We'll see how long that plays out. But I think we will not be around next week, right? Because it'll be Turkey Day
Right.
next
Yep.
week. So
We'll take it
we'll
off.
see. We'll see if we get the typical random meme rally of Thanksgiving.
Yeah.
I anticipate maybe something like that happening very briefly. But then we'll be back in the week after. So until then, Austin, have a good Turkey Day, and we'll see you then.
Yeah. Thanks, Matt. See ya.